Welcome, everyone. Thank you for joining our self-directed IRA and Solo 401k Q&A session. My name is Natalie with Sense Financial, and we are a boutique financial firm specializing in self-directed retirement accounts with checkbook control. I have Dmitriy Fomichenko joining me today, and he will be answering all of the questions. Dmitriy is the founder and president of Sense Financial Services, and he began his career in financial planning and real estate investing in 2000. He owns multiple investment properties in various states and is a licensed California real estate broker. Dmitriy holds a designation of Certified IRA Services Professional from the American Bankers Association. And over the years, he has taught hundreds of investment and financial planning seminars and has mentored thousands of investors. Welcome, Dmitriy. Thank you for joining us today and answering questions.
Natalie, thanks for joining me as well, and looking forward to the questions. Let's jump in. Welcome, everyone.
Yeah, first question here we have is from Sam. He's asking, is the property 100% owned by my solo 401k, even though the property owes 100K in a non-recourse loan?
Good question, Sam. If you have a non-recourse loan on a property inside of your solo 401k, your solo 401k still owns the property. Yes, there is a leverage on it. There is an outstanding loan, but the property is still owned by the 401k. 401k is the legal owner of the property. The same way, if you own a property, your home that you live in, and if you have a mortgage on it, title is in your name, maybe you and your spouse's name. There might be a loan on it, and that is recorded with the county so that the lender is protected, but legal owner is still you in that case, or in this case, the legal owner is still a 401k.
Next question here is from Min. He'd like more information on IRA holds shares of land.
This is a good time for me to actually share that sometimes questions come in, they're a little bit unclear, and this is one example. I'm unable to answer this because this is not even a question. Min, if you're joining us, if you don't mind stating your question, just provide us some more details, and I'll be happily I'll address that towards the end if you just put that in the Q&A, but you certainly can hold a land inside of your IRA. You can hold land as an investment inside of an IRA, but I'm not sure exactly what you mean. So we'll defer to that clarification towards the end, hopefully.
This question is from Tom. Is the IRA limit for 2025 for seniors 8K?
The contribution limit for an IRA for 2025 is $7,000, and for those who are over 50, not just for seniors, I don't consider myself a senior, but yeah, so if you're over 50, then you have additional $1,000 catch up for a total of $8,000. That's the contribution limit for this year.
This question is from Lakshman. Can a single member LLC with no employees have a solo 401k? And which one is better, a solo 401k or an IRA?
All right, let's break down these two questions. Can a single member LLC with no employees have a solo 401k? Yes, a single member LLC with no employees can have a solo 401k, but it needs to be a legitimate business. So the clarification here, if you have an LLC that used as a holding entity, for example, that's not a business, it's a holding entity. It holds a piece of real estate, perhaps. Then real estate income is passive, and there is no self-employment income in this scenario, so it won't work. But if you do have a business, legitimate business that you're running inside of the LLC, it's a single member LLC, no employees, then certainly you can establish solo 401k for this business. And the second part, which one is better, solo 401k or self-directed IRA? Well, if you compare them side by side, we do actually have a webinar on this topic. And if you go to our webinar section, you can go to the introduction to self-directed IRA and 401k, where we do a side-by-side comparison. Both of these vehicles will give you the ability to have checkbook control over your IRA or 401k or your retirement funds. You can invest in virtually anything with both of these vehicles. The prohibited transaction rules are the same, but with an IRA, you need a custodian. So that's a third party, additional layer of complexity. And you need a LLC to get the checkbook control, or a trust possibly to get the checkbook control. So you have additional cost, additional layer of complexity with an IRA, but the outcome will be similar. But Solo 401k has a number of other benefits besides the fact that you don't need a custodian and you don't need an LLC to get the checkbook control. With Solo 401k, contribution limits are about 10 times higher than an IRA. So as we just covered, contribution limit for an IRA is $7,000 for this year. And 401k has a limit of almost 10,000, 10 times more. You can contribute over 70,000 potentially into a Solo 401k per each participant. Also, if you use leverage with a Solo 401k, with an IRA, there will be UBIT implications. Solo 401k is exempt from the UBIT on leveraged real estate. You can take a participant loan from the 401k. You can correct a prohibited transaction with the 401k. And so those are just some of the advantages that 401k has over an IRA. So generally speaking, it is a better option if you're eligible for it. That's the key, because not everyone is. So if you're not eligible, self-directed checkbook IRA is still a great option. But if you're eligible, then yeah, Solo 401k will be the way to go.
This next question is from Rohith. How to invest jointly with my wife's 401k and my non-401k funds?
Good question, Rohith. Can you invest jointly with your retirement funds? It's possible. It is possible to invest jointly, but we will have to look at the specifics. What kind of investment are you trying to make? And what are the details? So generally, if you can pool the funds together, if you do so, then you have to keep the percentage the same. So if you, let's say, going 50-50, then you have to keep that percentage the same. And the percentage is determined based on the amount of capital that is contributed. So if you're making $100,000 investment, and you're putting, say, 20,000 from your personal funds and 80,000 from your 401k, you can't make the split 50-50. It will be 80-20, okay? But also keep in mind that by pulling the funds together, you are a disqualified person to your 401k or to your wife's 401k. And now disqualified person is part of the transaction, and that you now running a risk of potentially committing a prohibited transaction. Even though if the transaction is structured to be okay in the beginning, there is a potential risk that down the road something might change, and you can commit a prohibited transaction. So generally, we don't recommend that. Again, it's kind of a case-by-case basis. It's possible. You got to be careful with that. And just give us a call. Let's chat about this, see if there might be a better option.
Okay, Milad is asking, is it a must to have an LLC with the self-directed 401k?
No, you don't have to have an LLC with a 401k. Now, if your business is structured as an LLC, that LLC will be the sponsor of the 401k plan. But you don't have to have the LLC inside of a 401k to make it work. In case of an IRA, LLC is used as a vehicle to provide you with the checkbook control and the ability to bypass the custodian. when you're making investments and all the transactions that are related to that. But with the solo 401k, trust is used as a vehicle to hold the plan assets. So you don't have to have an LLC.
Next question is from John. What is the best way for a Roth solo 401k to avoid UBIT?
Good question again, John. So let's break down what UBIT is. UBIT stands for Unrelated Business Income Tax, and this is a tax that is assessed specifically on nonprofits, and 401k is a nonprofit. When it is due in an IRA. Let me address first an IRA. If you use a leverage to acquire real estate inside of an IRA, there will be UBIT consequences. So the portion of the real estate that is leveraged and the portion of the income that is derived from that portion of the real estate will be subject to UBIT after a portion of the expenses are deducted. But solo 401k is exempt from the UBIT on leveraged real estate, so that doesn't apply. However, it will be in play if your 401k makes investments in any kind of a business venture. So if there is a business income or some kind of earned income inside of a 401k, let's say you invest in a business franchise, well, the income from that franchise will be considered earned active income to the 401k, and that income will be subject to UBIT tax. Another example, if you start flipping properties inside of your solo 401k, depending on the number of flips that you do and the frequency of those transactions, then it may look that you're now running a business inside of your Roth solo 401k. Then all of the gains, all of the profits from that activity will be subject to unrelated business income tax. But as long as you invest passively using your Roth solo 401k, all of the gains, all of the income, all of the profits will be sheltered from UBIT or any other tax for that matter. Examples, you're owning a rental property, you invest in a syndication where you're just your 401k is a limited member and there is a general member who's managing the deal. So that's completely passive on your end. You can invest in precious metals, cryptocurrency, you name it. So again, as long as the investment is passive, there will be no UBIT implications for the Roth solo 401k.
Next question is from Ali Yu. I have a SEP IRA at Wells Fargo. How do I move it to my Schwab solo 401k retirement account?
If you already have a self-directed solo 401k plan, then this plan can accept rollovers from any other retirement accounts, including SEP IRA. So all you have to do is complete the direct rollover form, send that to your SEP IRA custodian, which is Wells Fargo in this case. They will process that as a direct rollover, issue a check payable to your solo 401k, and mail that check to you, which you can deposit into your 401k account. So pretty straightforward. You can log into the client portal, go to the setup section, and then click on the rollover step, and we have the form in there with the instructions how to complete it and how to submit it. Pretty straightforward. Should take a week on average in most cases, and there's completely no tax consequences because, again, it is a direct rollover. You're moving funds from one retirement account to another without personally touching those funds.
Next question is from Joseph. Can you please explain how the solo 401k is taxed when taking RMDs once the required age?
Before we jump into this question, I just want to remind you that we give you the ability to ask questions here. So if you go to the Q&A section and just type your question there, Natalie will read that and I'll answer that, and we'll just go as long as needed, as long as we have the questions. Because looks like this is the last question that was pre-submitted, so I'm just giving you a heads up here. RMDs, required minimum distribution from the solo 401k. So whether you're taking required minimum distribution or any other distribution from the solo 401k, obviously it's your plan, it's your money. You can take the distribution at any time. If you do that before normal retirement age, obviously there will be consequences to that. You have to pay penalties. But if it's a pre-tax, then you're required to withhold 20% withholdings, taxes, send that to the IRS. And we do provide you with the instructions on how to do that. Again, if you go to the client portal, go to the knowledge base, and then you can click on or search for RMD, or you can search for the distribution keyword, and you'll find an article that explains how to do that. So you can register with the IRS to send them the withholding, and then you just submit that and you take the distribution out. So pretty straightforward. Again, if it's ROT, no tax consequences. If it's pre-tax, then you will have to pay the taxes. Again, you're required to withhold 20%, but that's not necessarily how much you're going to have to pay at the end, because when you do your tax return, your CPA or your tax preparer will run the numbers, will input the amount that you took as a distribution that will be counted as your taxable income. They will factor in any taxes that you already paid, and then we'll make the adjustments as needed at the end.
Okay, we do have a couple of questions submitted here. A question here from Ohi. Can you take out a loan for buying real estate from your solo 401k?
Can you take a loan to buy real estate from your solo 401k? Well, the question is, are you buying this real estate personally? Looks like that's what it is. Or maybe I'm mistaken. But again, let me give you two scenarios. So if you're personally buying a property, you're personally buying real estate, and you want to take a loan from the 401k to do that, yeah, you can take a loan, take a participant loan up to $50,000, so 50% of the balance. So that's the loan that you can personally take. Now, that's a personal loan, so it's not specifically to buy real estate. It's a personal loan. You're personally responsible for paying that back. But if you are buying or wish to buy real estate inside of your solo 401k, you can take a loan to acquire that piece of property. There is no limit how much you can borrow, but the key here is that the loan must be non-recourse. You need a non-recourse loan to acquire a piece of real estate inside of your 401k or an IRA. I hope that helps. And if I misunderstood your question, again, Mahit, you have the opportunity to clarify it.
A question here from Jane. She'd like to know the pros and cons of using a solo 401k funds versus personal funds, where you get tax benefits into a syndication. And then she did add a comment that says depreciation benefits.
Good question. I recently addressed that question on a Bigger Pockets forum. And you need to understand that your solo 401k is not you. Solo 401k is a separate legal entity that is separate from you. So what takes place inside of the solo 401k is completely unrelated to you personally. So if you're buying or getting into acquiring syndication interest in your solo 401k, which if you are to buy that personally, then you can claim some tax benefits. But because you're buying this in the solo 401k, so essentially it's not you who the investor is. It's a separate legal entity that is the investor. So you can't claim any benefits on something that you don't own, because you don't own that investment. And to make it very clear, I'm going to use this example. What if it was me, Dmitry, investing in certain syndication or buying a piece of real estate? You can't expect or you can't claim tax benefits, depreciation, any expenses on the investment that I own. So in the same way, you cannot claim any expenses personally on the investment that your 401k owns, because that is a separate legal entity. Hope that helps.
It does look like we answered all of the questions. I do want to add that if there are additional questions after today's session, or if you'd like to speak to one of our experts, please reach out to us. We'd be happy to set up a time for you to speak with one of them. But thank you for joining. I hope you
No,
all have a
and Natalie, just let them give them another chance before
okay.
we wrap up. So guys, take advantage of this. I'm here. I'm ready to answer your questions, anything that is on your mind. Remember, I always like to say this, that it's not only you who are benefiting from asking the question. Everybody else will benefit. Everybody who's on the call will listen to the answer. They'll learn something from this. And then this is being recorded. So we're going to post it on our website and on our YouTube channel so that others can benefit from that as well. So again, if there's anything that you can think of, going once, going twice. Well, I guess no more questions. Well, there we go.
There's one.
Yeah,
Another one from Mohit. Do you recommend to have a LLC for buying real estate under a solo 401k?
good question, Mahit, and thanks for asking. So yeah, a great example that you'll get some clarification, and a few other people will probably learn something from it. Do I recommend having an LLC to buy real estate? Well, as I mentioned earlier, there was a related question. You don't have to have an LLC inside of the 401k to buy real estate. You can just own it directly in the 401k trust. But LLC will provide you additional layer of liability protection, which is not a first layer of defense. And typically, and again, just a quick disclaimer, I'm not a asset protection attorney here. So I'm just talking to you from experience. The first layer of defense for the protection should always be adequate amount of the liability insurance. So when you buy a rental property in your solo 401k, make sure that you get the landlord policy. And that landlord policy comes with the liability protection, at least $300,000, maybe $500,000. So that's going to be always your first layer of defense. And then on top of that, you can consider buying an umbrella policy. Now, if you buy an umbrella policy, remember that you already have umbrella policy on your personal properties. It doesn't extend on your 401k. So you will need a separate umbrella policy. And again, if you have umbrella policy on your 401k properties, it will not extend on your personal properties because, again, technically those are two separate legal owners, just like in the example that I used a couple of minutes ago. So two separate legal owners. But so that umbrella policy, and then on top of that, then you can do the LLC to provide you with the additional protection. So, and even then, LLC does not give you absolute protection. So again, it's a personal choice. You have to look at the cost and benefit. For example, if you own a property in California, it comes with the cost of $800 of the franchise tax here in California. If you do it in another state, then many states don't have any fees. So that will be much more cost effective, but not required, can be helpful. So it's a personal preference.
A follow-up question from Ali Yu regarding the SEP IRA rollover to my solo 401k. Which address will I send the rollover form to once I download and complete the form?
So when you submit a direct rollover request to your SEP IRA, you have to contact your custodian. I believe it was Wells Fargo. So you have to inquire with them and ask them, where do we submit that form? Oftentimes you can submit that form electronically by fax or just emailing. So you don't have to mail it anywhere. But ultimately it's because that form is addressed to the custodian, and that's the question to ask them. Because obviously every custodian will have different unique instructions for them.
And this question is from Gustavo. Can you remind us of the requirements regarding paying back money borrowed from 401k for personal use?
Sure, Gustavo. When you take a participant loan from the 401k, again, the limit on the loan is 50,000 or 50% of the balance, whichever is less. And this is a 5-year loan. Okay, so it's you have to amortize it over a period of 5 years, and you have to do it before you take the loan out. So by the time you take the loan out, you know what your payments are, and you can select at the time of taking the loan. You can select they wish to pay those payments back monthly or quarterly. You have that option, and you will know what your payments are, and you're going to have to make those payments. If you default on the payments, then there is some leniency there. You can actually go back to the so if you defaulted in the quarter prior to now, then you have the ability to catch up on those past due loans. But if it goes beyond this quarter, then the loan is considered will be considered distribution, and that will be taxable event. But again, it's the payments based on the amortization schedule that you calculate at the time of taking the loan out or before taking the loan out. And we do provide a helpful spreadsheet that you can just go in, you can punch in the numbers, and you can get the amortization schedule generated for you. So very helpful.
Okay, don't see any more questions that came in. So I think we'll go ahead and close out this session. As I mentioned before, if there are additional questions or if you do want to speak about your situation with one of our experts, please reach out to us. We can set up a consultation. Again, thank you for joining. Hope you all have a wonderful day.
Yeah, thanks, Natalie. Again, just to maybe reinforce this a little bit, as a client of Sense Financial, we do offer unlimited support to you. So you can get to us with any questions that you may have about your solo 401k or self-directed IRA related questions. And in fact, you don't have to wait for the Q&A to ask the questions. Now, I like you to come here and ask questions because, again, in addition to you learning, other people will be learning, but you are more than welcome to contact us, again, as a client of Sense Financial, and we'll address your questions. You can give us a call, you can email us, and we'll get those questions to you. If you're not a client, then again, if you just want to consult, have a consultation, we do offer complimentary consultations with one of our experts. If you do have a self-directed IRA or solo 401k and your provider is not answering your questions, well, shame on them. But again, you can reach out to us. We can try to address your questions. We can also discuss the possibility of you switching so that you can actually become our client, and then you can have access to our team for unlimited support that you may need down the road. But again, thank you for joining us. Thanks, Natalie, for hosting this, and you all have a great rest of the day, and see you next month.